Good afternoon, Maverick traders. It's Joe. It's Monday. It's the 13th of March, and we had a pretty interesting day based on a pretty aggressive end to last week. I've got my 2 cents. Follow along. Just make sure you take responsibility. You know the drill. Let's get into the market analysis because we actually did very well. And what I mean by that is I was expecting after Thursday and Friday of last week for these markets to absolutely fall apart. Now, we did get a small gap, but every market recovered very, very nicely. In fact, let's take a look here. The NASDAQ, you can see, jumped straight to it, almost closed up about 0.5%. The Dow and the S&P did not do very bad at all. At one point, they were all up pretty good, and we just kind of slowly bled away. The Russells slipped quite a bit, oil as well, but we can see energy actually participated pretty good in the majority of today's selling. And then I can still see a flight to safety here with gold up 2.67%. In fact, since I have it up here, guys, take a look at this gold chart. Take a look at the VIX. And let's also pull up how the cryptos did. Very interesting. This is an absolute pull out of the financials and into other sorts of areas that money could go to. Very specific type of selling today. Let's get a little deeper. So gold and crypto surge higher. Most of today's selling was in the financial sector. You guys already know the daily news here. So the advanced decline line, 61.34. After Thursday and Friday, I thought that'd be more like 80-20, but then you take a look at the 50-day moving average, and that's 80-20. I truly think that markets were already on their way down a little bit. Powell's hawkish comments on Wednesday and Thursday when he addressed the Congress and Senate, and then that out of the SVB bank announcement coming out of left field there really shook things up, and we dropped pretty hard. I think that's why we're at that 80-20 level. So the bearishness is in play still. Let's jump straight to the chart here. Because regardless of what caused it, it was caused. And it's very difficult sometimes to analyze stocks and options without some sort of news attached to it. Now, if we were just to forget everything that happened and just focus on this beautiful bear rally up to a falling 20-day moving average with a great reversal signal and an absolute follow-through confirmation through support, here we are approaching December's lows, and that's the next line in the sand. Also an increase in volume with that and some pretty good ranged candles. It looks like an absolute uniform rollover to the downside. Okay, now we're stuck with other things. Well, we have the CPI tomorrow. We've got a market that recovered the majority of its losses for the day and closed flat. We have activity specific to the financial or the bad news sector. So there is optimism out there amongst traders. It's going to be pretty interesting to watch. But we're at that level, and we'll see if we're going to break it or bounce off of it. Let's go to the Qs. This is showing a little bit more resilience, as you might have guessed, because it didn't participate in any selling today. Well, a little bit of selling, but this one actually went all the way back up to close. Above the previous day, you saw it was up about 0.5%. Still, that same beautiful touches the falling moving average. It's trying to break that support level, and it's trying to get back above it. So let me erase that line because you can still see we're hanging out above, just above. It closed above the 50-day moving average with about the same amount of volume. So what am I talking about? Well, this is absolutely specific to one sector because that sector was in the news and it had its announcement. It did carry over to energy and basic materials, which could be lumped together. It just depends on how you guys want to look at it, but the majority of it was in the financials, and I think it'll still be there for a few more days until things come to fruition. Is this an onion that's going to continue to peel layers? If we get one bank or 2 or 3 or 4 more to do this, I think it will carry over to the rest of the markets. If this is a very specific bank and it's got its own problems and a mass exodus, nothing specific to the company, just happened to have a little bit of panic and everybody sold the stock and took out their money, well then these markets could correct from this rather quickly. I'm going to stick on the cautious side. I'm -1 for the week, and the only reason I'm -1 is because, well, I should say there's 2 reasons. The first one is we are approaching this December low, and it looks like the market's already kind of exhausted itself with a gap, and it might be wanting to kind of go sideways or maybe even climb higher. So I'm at that -1. However, my monthly outlook believes that if this does have its rally, there's nothing to keep it from rolling over if we do get a hotter than expected CPI and inflation stays where it's at. This can actually carry in through the end of the month and we get another rate raise. And if it's going to be a whole 50, that would also maybe cause it. But for now, I think the markets might stall out here. But it really depends on that CPI number tomorrow. Now, as you might guess, I didn't find anything bullish. There was nothing that really stands out or what I really like. Now, there are some potential trades here on the neutral and the bear side. The first one is Meta. This is a pretty good chart, and what I was looking for, folks, whenever you have days like Thursday and Friday, like last week, you look for things that participated in it, was punished by it, and outperformed it. And I didn't see anything that really outperformed it. Everything seemed to slip Thursday and Friday, but today there was a couple things that hung in there. However, Meta, take a look at what it did on Thursday and Friday. Those were some horrible days in the markets. However, Meta hung in there. In fact, it bounced back up to a little bit of a level and actually closed up for the day. Now, what I like about this is we talked about this sideways last week, I believe, or a couple weeks back. And it seems to just be pinned right between that 170, 190 level. So I do like this kind of sideways. If you guys are worried about the overall markets, just wait. Well, let me let you guys in on a little secret. I'm not buying this today. I'm not getting into it tomorrow even. I'm just going to see, hey, this is on my watch list because if the markets show some resilience or do that sideways on their December lows or on the December support levels, this will be one to look at. Another one in the same situation, or similarly to the same situation, I say, is O'Reilly. Now, O'Reilly is a little wider. It's a tougher one to gauge. It's more expensive. But if you wanted to play something as a retracement, maybe back up to this 840 level, I didn't like the two shadows today and yesterday. However, it did stay above about that 8. What do we want to call that? I'm sorry, my line is bugging me. Right around that 820 level. We'll see where it goes. If this shows any signs of climbing back up to that 840, I'd be very, very comfortable throwing on something sideways. If it rolls over, it's just off my list, plain and simple. But I did like it as a sideways trade. On the other side of the spectrum, folks, ones that didn't participate in today's move back to close flat was Southwest Airlines. A great breakout, big candles volume with a large candle. Now, this might feel a little overextended, and it's already back to support levels that it had its lows in October. I just think it might be something to play if the markets continue to roll over, bad CPI, we fall apart. This might be one just to insult to injury, throw a credit spread on it if you're worried about a revisit to this support level here, maybe the 32. However you guys want to do it. But I just like it because it's showing underperformance. It's still slipping. In a sector that got hurt as well today, this is energy. And I liked how ConocoPhillips here confirmed. But I don't like it when they gap confirm. It sucks because it takes away all this nice meat we could have had between 104 and 100. It's okay. I'm still focusing way back here if you guys want to take a look there. The end of September. And this could do the same thing. Maybe slip a little bit lower. It might retrace, but it'd be comfortable. I'd be comfortable playing a credit spread below 105, maybe a 105, 100 even, if you see it start to retrace. But if it slips, then you could do something a little bit more bearish directional. So that's what I've got. I always add stuff to the list. I take them away based on if they continue, they're great. If they don't, I throw them away. But those are what I'm looking at. So we're approaching those December levels on the SPY and the Qs. The diamonds, however, folks, are absolutely looking horrible. They look like they're already past the support. They're in their bear trend. They're falling apart. These markets are still weak. They're still bearish. I know there's optimism, and we're seeing a market that disagrees with the Fed's outlook, but it's still susceptible to its movement. So we'll see what's going to happen because the markets are showing signs of breaking down. Do we continue higher or do we break down? And I truly think that CPI is going to be the teeter-totter. We already have a little bit of a nervous trader out there. You guys have seen the volatility index, which was also climbing Thursday and Friday, even today. So we already have a nervous trader out there, and if one more maybe kick to the inflationary nose might just make them just drop and just run. We'll see. We will see. That's tomorrow, and then we've got a couple of days, and I'll be chatting with you again on Wednesday. So check your potential trades for earnings reports. I didn't see anything that raised an eyebrow. We should be on our way out of earnings season here. We've already got enough in the news to keep these markets very interesting. Thanks for joining me, guys, and I'll talk to you next time.